Hello, guys. This is Vinit. Today is 25th of June, and it is Wednesday, and things are getting a lot clearer now that the ceasefire is in place. Nobody has violated the ceasefire since it's been in place. So now we can sit back and look at market in a totally different light. So now there is no war premium on safe haven assets and markets, and the trade is somehow some like a little bit getting back to normal. There's a bit more sanity around trade between US and other countries and around tariffs. So there is not a whole lot of saber rattling. There is not a whole lot of rhetoric that is coming out of White House. The only rhetoric that is coming out is the claims that, hey, we destroyed Iranian um, nuke sites versus we didn't. Like, other than the news agencies like CNN are claiming that not much of a damage was done to the sites. But then that's a debate, and that's a good debate to have, to kind of retrospect on as to what was done, and it was done correctly and incorrectly, and what are the repercussions. But at least the absolute craziness that was uh, going on since this whole tariff wars had started. Now things are subsiding. Now things are calming down a little bit. Things in the last 24 hours have calmed down tremendously. And what has that done is safe haven assets like gold. Let's see what gold is doing. So gold at one point had reached almost $3,500 per ounce. Now it's down to $3,315 per ounce. So it's really, really important to understand that even though, yes, it's off 4-5% from its all-time highs, doesn't mean that gold is going to crash down to nothing. No, that's not going to happen. Gold is at these elevated levels because more than one reason, more than just a war, more than just a trade. Gold is anti-fiat money. Gold is ringing the alarm bells that, hey, there's something wrong with the monetary systems. That's why it rose so high so fast. Unless the monetary system is fixed, unless all this crazy printing that is going on that stops, gold is going to remain at the elevated levels for foreseeable future. So that said, let's go back and look at how things are shaping up with the US dollar. Because if you've been following me for last some times, as I've been coming live every day, including Saturdays, I've been following a pattern. I have been following something very, very closely that I've been calling a trade of a lifetime, which got invalidated yesterday. And I told you guys, hey, why? What level to watch, how everything unfolded, and there is something really, really, really important I want to show you guys today, and as to why I have such a strong conviction. Why do I think that this trade will unfold and as I expected, and it's going to unfold, even though it got invalidated yesterday? And I told you guys, yes, guys, in the short term, I may be wrong, but in the long term, I'll tell you guys why my conviction is so, so, so strong in this. So let's go back and look at this DXY chart. Okay, so if from the last, say end of December, say end of 2024, where the DXY or Dixie, I'll call it Dixie, hit around 109, so almost say 110, just to keep it simple, and it dropped all the way down to 98. That's like a 12% downfall. That's huge for any reserve currency, and I've repeated myself so many times. And I sat yesterday, I spent a few hours analyzing, okay, can I go back in the history and see when is it that had happened before, something like this in the same pattern. So now here it is. Here now we see, look at this. From the peak, I have one wave down. And this is again not Elliott wave, guys. Please do not mix this with Elliott wave. This is something totally different, and you'll see why in a second. So just play along with me. Just there's something you will see. There's something profound, in my opinion, that is unfolding in front of our own eyes. Okay, so you'll see this one level. So it's a low. So it's a lower high, lower low, lower high, an extreme lower low, and then there is like kind of sideways consolidation that is going on for a long time, and then there is this trend line. So this trend line broke earlier actually on Monday. So today's Wednesday, so this is today's candle. On Monday, this trend line broke, but not decisively. So I told you guys, okay, guys, now is the time you may want to start taking small trades in the favor of US dollar, because we want to ride this back all the way back to 110 and higher. This is going to be trade of a lifetime. So that got triggered. Okay, guys, so that got triggered. But then this whole Trump tantrum happened. This whole ceasefire, non-ceasefire, all this, like, so much negativity that came, and those confusion came in the marketplace, all of that. And then the Dixie tanked like anything in the last couple of days. So let me look at a 4-hour chart. Here. Look at this. Look at these big candles that Dixie formed, and then all of a sudden it did not break the low, the support line that is carrying. So it did not break the previous lows, but it took a huge hit and did a big technical damage in the last, say, 24 to 48 hours. Now, I know it's bad, it's very negative, it's done a lot of damage in the short term. Guys, the key is in the short term. But I think long-term structure, the long-term picture still remains. And it's very important that we understand as to what that is. So, okay, so now let me show you guys this exact pattern. What happened when this exact pattern took shape the last time? Okay, guys, here. And it wasn't too long ago. Okay, guys, here. You can see one leg lower, lower lows, lower highs, number 3, 4, and 5. Short, and here we go. You see the pattern here. There's consolidation that's happening, and then boom. There's one candle up that broke, then it came by, tested, and look at this beautiful move that was to the upside. So that was like a 6% move to the upside, and it was such smooth move. Okay, guys, so I said, okay, fine. Maybe it's just a fluke. This one pattern that I was able to, like, 2 identical patterns right back to back. Okay, can it be fluke? Yes, absolutely, it can be fluke. But let me go back a bit more and see if I can find another one. And same thing happened around COVID, guys. Okay, so here, 1, 2, 3, 4, 5, consolidation to the sideways, the trend line break, and boom, look at this beautiful move, guys. So it took from all the way at the bottom is 89, and it went to 110, almost 109. From 89 to 109, that's a 20, actually from 89, it's like 25% move in matter of months. Actually, just about a year or so. But that was absolutely crazy. So that was the COVID move. Okay, guys. So now, so this present move is the Trump tantrum move that we are facing right now. Because, again, we've gone into the politics of it. And I said, okay, maybe one time is a fluke, 2 times is a fluke. Can I identify that if I go further back? Can I go see more incidents like that? I said, okay, let me keep going back. And then, sure enough, I see that back in 2017, 2018, this was the where there was this huge issue around debt ceiling that took place. Okay, guys. So every time there is a fiasco, every time there is a crisis, like debt ceiling crisis, like COVID, so dollar crashes into it, and then there is a resolution, or there is intervention, that dollar actually skyrockets out of that crisis. So now Trump crisis, Middle East war, all of that. So dollar is crashing into it. But now once we are getting out of it and there is resolution, trades are going back, and then boom, dollar is going to skyrocket like it always has done in the past. So I'm saying, okay, so here again, see 1, 2, 3, 4, 5, sideways consolidation, trend line break, and look at this beautiful move up above. So again, 12 to 15% move. I said, okay, fine. Can I go back and find more examples like this? Okay, I said, okay, let me keep going back. And I'm not going to settle for anything less than exact, I would say, within, say, 90% of that same example. Okay, let me reset the chart view. Okay. So now I'm back. Oops, actually reset the whole thing. I'm sorry, guys. Just bear with me. 1 second, guys. Okay, guys, sorry. So let me go back. So that was 2018, the debt ceiling one. And I said, okay, can I find more examples like that? And I go back and I go back, nothing yet, nothing yet. And boom. This is, hey, why is this chart doing this? Oh, again, it reset. Sorry, guys. I don't know why it's behaving the way it is. It wasn't doing this earlier. So I just want to move back. Again, I'm back to 2000. This is COVID. This is debt ceiling. And then we want to go to the European debt crisis. I'm not sure if you guys remember that right after. Again, why am I seeing this like this? Come on. This is now pissing me off, guys. Reset chart again, guys. Okay, let me do a month. Oh, this is 4 hour. Maybe that's why. Let me do a daily. Make a daily chart. Okay. Okay. I think this will work because I had brought the chart down to a 4 hour level. Maybe that's why it was behaving the way it was. Okay, so now daily level again. So now this is the COVID one. This is the debt ceiling one. Okay, guys. This is now, if you remember, guys, around 2011, 2012, there was a huge debt crisis, European debt crisis, where Spanish debt went broke. The Spanish sovereign debt basically crashed. Greek, their public debt, their bonds basically crashed. So it basically crashed into here, and then the dollar demand was really, really high, and then it came out of here. But it's not important what actually caused it. But here's the thing: every time there is a huge crisis, dollar falls going into the crisis. So here, 1, 2, 3, 4, 5, and then it's consolidated. So that's the peak of the crisis when it's actually consolidating. Just like now, it's consolidating into the peak of the crisis, where the Gulf War is when it was like at the highest, when there's the Trump tariff tantrums were as high as the dollar fell into it, crashed into it. Now it's been consolidating, and here's the same thing consolidating, and now it breaks out of it when there is a resolution to the crisis. So now I said, okay, fine. Now I have the same setup. Every major crisis going back 15 years. Now, can I go back further and have the same exact setup? Sure enough, guys, now you're looking at housing crisis. So going into the crisis, so from 2006 to 2008, going into the crisis, 1, 2, 3, 4, 5, boom. This is the height of the crisis, and dollar bottoms. Dollar falls into the height of the crisis, and then the resolution is coming out. Crisis is unfolding. Governments are stepping in, starting printing money, and boom, and dollar starts taking off right as we are getting out of the crisis. So this is getting into the crisis. Dollar is crashing in, and almost where 2009, where crisis is over. Look at the dollar from 71 all the way to 90. So 71 to 90 is almost 30% move, guys, in matter of 6 months. So dollar moved 30% in matter of 6 months. Higher the crisis, bigger the crisis, stronger the fall. Stronger the fall leads into equally higher move in the US dollar index. So now I've shown you guys it has happened 5 times in last decade and a half. This exact setup that we are in right now. So that is what I see, and that is what gives me my conviction as to why I think we are now setting up for a bounce as these crises are being resolved, as the dollar is consolidating right now, as we see that it is a little bit lower. Can it go a little lower, like to this here? Can it go a little lower, like up all the way, say maybe Where did it go? Where did it go? Where did it go? Here. Can it touch this support line here? Can it go lower, say down to say 97 or even a little bit below 97? Yes. So that's 100 points lower than here. But look at my upside here, guys. Once it breaks it, once I have my confirmation, and once it breaks the trend line, and I want to see what my target is, it is 11,000 points or 1100 pips, whatever you want to call it. That is a huge move, and it's going to happen very, very fast, as it did in the past 6, 7, 8, 4, 5, 6, 7, 8 times. And I'm sure I can find many more such examples going back 10 years, 15 years, 20 years. These were at a daily level. These are not chart levels where I'm looking at 1 minute charts, or a half an hour, 1 hour, or 4 hour. These are daily charts. These are long-term charts, and these take time. These take months and years to unfold. And what I see unfolding in front of us is going to take months to unfold and months to go higher. And then once it does, I want to make sure I am here to tell you guys that, hey, we're doing this, we're going in, and join us to come along with the ride. And that said, I think the setup is still on, even though it had a little hiccup earlier. But I think the setup is still on, and I am closing. I watch this like a hawk. I am on this like anything, guys. Every day, I look at it. I look at it first thing in the morning, and I follow it, and then do my research. Like I showed you the patterns that I identified, and I actually did a piece on it, and I am going to create another video as and when this actually unfolds. So that's it. That's all I wanted to share with you guys today. Unless you guys have any questions or anything else that you would like me to cover, I would love to do that. If not, I will be back tomorrow, and I'll have more updates for you guys. And tomorrow I want to dive into today. I just wanted to keep it very, very kind of concentrated around Dixie and show you guys what I've seen in the past and why I am here with such a strong conviction as to how I see things play out. Can I be wrong? 100% I can be wrong. There's no guarantees in the marketplace, but what there are probabilities. This is a very high probability setup, and we know when to get in. And if certain things don't happen, we're not going to get in. So that's where we have to be very, very nimble. We have to be very careful on how we actually go about this particular trade. But again, this is going to be a game changer for the next 4, 6, 8 months. It's going to make a lot of money for a lot of folks. And I just want to make sure we are all part of this particular move. And I am going to now tomorrow, I will get into individual charts, go over maybe, I don't know, EU or USD, CAD, and look at it from a very long-term perspective, where I see things going long-term, where things are heading in the short term, and which side to be, short-term, long-term, medium-term, for a couple of currency pairs. So we do some live analysis, and hopefully you'll have some questions. We want to participate. That would be great. And if you want me to cover anything in specific, I'm more than just send me a DM or leave a comment, and I'll be more than happy to do that for you guys. So that's it. If you don't have any questions, so it looks like somebody have a question. Ian, you have a question? Go ahead. Go ahead, Ian. Oh, you don't? Okay. Oh, I thought you wanted to say something. All right, that's fine. All right. If you don't have any questions, I would like to call it a day for this call, and I will be back tomorrow, exact same time, guys, 2 p.m. UST, and then UTC? Yeah, UTC, yeah. 2 p.m. UTC. I will be here for whatever, 15, 20 minutes discussing what's going on. And if I need to be here for longer, if you want me to cover anything, I would love to do that. That's it. I'm checking out. I will talk to you guys tomorrow. Till then, have a great evening, and let's make loads and loads of money, guys. Bye.